Hello, viewers. I'm Nivedita Mookerji, and our guest today is Mr. Rajesh Magow, CEO of MakeMyTrip. Mr. Magow, it's been 1 year since those bad days in March 2020 when everything shut down and our lives changed. We didn't know at that time for how long, but lives changed. The flight stopped because of the pandemic. So I'll begin by asking you, where does the industry stand now? What is your assessment for the industry? We'll come to your company a bit later.
So, hello, Nivedita. Thanks for having me. Yeah, I mean, it's been actually a full 1 year practically, as you rightly pointed out, and it has been incredibly challenging few quarters for the industry. I think it'll be fair to say that. Where it stands today, if you try to compare it with where what the situation was back then, when hell broke loose on what 25th of March, I would say. Um, I think things have improved. Things have improved. We are definitely seeing some segments recovering nicely, largely led by domestic travel, though. And it has been, over the last, I would say, about 5, 6 months, slowly and gradually just coming up. I mean, we still have international travel, which hasn't really opened up, which is like, full 1 year has gone. And back then, like you rightly pointed out, it was completely unpredictable. We didn't know the timing of that. And, over the last few quarters, even now, we are hoping at some stage international travel would open up. But we will have to wait and watch, right? Because the international borders and the vaccination drive in the rest of the world is still sort of picking up. And till that happens, I'm not sure that the overall international travel is going to just come back in the same manner as it was pre-COVID. But on the other hand, domestic travel, as the first time when the unlock 1.0 kind of started, the domestic flights started to fly back. We've seen gradual recovery happening. So on an overall basis, where domestic flight segment is concerned, the recovery is about 65 to 70% on flown traffic, while the capacity is capped to about 80% that could fly today. And the hope was, except for the last 10 days, where again some of the states, as you know, have become hotspot. But if you discount that for a minute, the hope was that in the coming summer, we will have very close to pre-COVID level sort of capacity flying as well as the passengers flying. But now, with the last 10 days development and the numbers are still, meaningful enough, and people are conscious. Um, especially in some of the sectors like Delhi, Mumbai, Delhi is definitely impacted hugely. Delhi, Bangalore is impacted quite a bit as well. That the overall traffic levels have really not come back to the same level. It may happen that it'll take some more time to get to the pre-COVID level, and maybe just come winters, October, November, December, at least the domestic travel flights, as well as the other ground transport, should come back to pre-COVID levels. So it's obviously the global caveat here is that there should not be any further bad news coming from the COVID side, whether the new variants and the rest of it. And also the hope is that the vaccination would have actually also picked up, like a lot of the population, or good percentage of at least urban population would have been inoculated by then, and then that should help just get the recovery back.
So what you're saying is 2021 winter is when we are likely to get back to pre-COVID levels. Earlier, you had said 2021 summer.
That is correct. That is correct. And I'm saying 2021 winters now, just to, it's more like a realistic slash pessimistic view. The optimistic view could be earlier. And I'm also keeping in mind all the segments coming back. Because the other important thing to note here is that while some of the leisure segments, visiting friends and relatives, the essential travel has come back, but the business travel is still to come back. The student travel is still to come back. And that's sort of linked with also the schools and the colleges opening up. and that in turn is sort of linked with the vaccination picking up as well. So I'm keeping all those factors in mind, and therefore, thinking that it might actually take a couple of more quarters.
You mentioned business travel. You must be, hearing the buzz in the industry because you belong to that industry. So, what are people saying? When will business travel really begin?
Yeah, I'll tell you what we are hearing from our clients. So there are two segments in the business travel. So one is small and medium enterprises, small traders, the small size company, mid size companies, and then there are large corporates on the other side. While we are actually seeing good recovery trends already on small and medium enterprises, large corporates is where the travel hasn't really picked up as yet. And when you go back to them and you talk to them, and what you're hearing is that, again, I think beginning of the new fiscal is when they think that they would start to think about bringing back the business travel. And then before that, I think they will have to obviously take calls around going back to office or working from either office, or let's say maybe a hybrid version of that as well. While some of the global MNCs, they have given a long sort of advisory that they will continue to operate from home, and therefore I think they will start to travel maybe even later. But within the country, even the large corporates, now we are beginning to hear that they are actually already started to think about the travel, as the rest of the country is sort of opening up, barring few states. It is coming back to normal. People have started to travel, and the sentiment is better. And within that, there are specific sectors which were even when the unlock 1.0 or 2.0 happened, they started to travel. The pharma sector, the FMCG sector, the frontliners, the health sector. So they started to travel, but not necessarily like, all the sectors. So net, what we think is that the large corporates should begin to start traveling in the coming summer or link it to the new fiscal. In small and medium enterprises, travel is already beginning to happen.
Right. So you also mentioned the cap on capacity. The cap on capacity of flights has been a bit of a controversial subject because some companies are for it, others against it. What is your take on that?
Yeah, I think you're right. I think it's there could be two schools of thoughts there, right? And I think if I can say it from airlines perspective, I think it was more from their point of view looking for flexibility of saying that let the capacity be there and leave the decision to us. How do we manage the load factors? How do we manage the fleet size? Linking to demand, etc. And I think that has been their point of view, which I think there's some merit in their thought process as well. But I think if you look at it from the Ministry of Civil Aviation perspective, government perspective, I think the idea of from their side, the controlling and capping the size and gradually opening up was, and this is not necessarily, by the way, also only true for flights. Right? Look at the railways. I mean, railways still it's open, about 33% of the total supply. That's the one transport mode which has really not opened up as much as we hoped it to be. So I think from their point of view was that I think it is just a prudent approach to open it up slowly and gradually. But if you see the net result of that, I mean, having said all of this, the net result of that, even if it is like 80% capacity, the load factors are low. So it's not necessarily has load factors have not necessarily caught up, with the pre-COVID levels. I mean, it used to be 85-90%. So the passenger flown, which is a function of load factor, is in any case lower than 80%. So, in 65-70% and improving. So therefore, net, I'm not sure it has had any negative impact of just capping it. And we've been hearing buzz now that come summer it should probably go back to 100% as well.
Jet is another issue that one is interested in. Jet may be flying soon, as we have been reading and hearing. And what are the slots that they are going to get back? So, what are the thoughts at MMT on this?
No, we would love to have them back. I mean, from our point of view, any airline, given that we are the intermediary, is more than welcome. I think what we need to see it from an industry point of view. It was actually an interesting news because Jet was going through. It hasn't really completed the whole process of bankruptcy and so on. And it was an interesting news if there was someone interested. I think the outstanding question that we need to think about it is that looking at the overall potential of the market here in India, uh, what are the ideal number of carriers that we need, so that the health of the industry gets better, because it's not really um, proven as yet, even pre-COVID times, that every airline was really healthy and making money and profitable and so on, right? So, so every now and then we've seen cycles. I mean, you know what happened with Kingfisher in the past, and Sahara and Jet has been the other story. So, we've been, from our point of view, seen pretty much all the cycles. But every 2-3 years or 4 years, if you see one carrier going down, that clearly doesn't speak very good about the health of the industry. So I think if there is any debate on this topic needs to happen, is more from that lens, to see whether what should be the ideal number. Does it make sense to have more careers? Then maybe some bit of consolidation might be better, because then at least everybody would be operating more healthy, if you will, on the bottom line.
But should Jet get back its slots?
Well, that is a specific one with. So, I mean, yes, I mean, it's a factor of many other things, right? I mean, I don't even know if they've already sort of lost the slots, and those slots have been given it to the other person as well. I think that, to be honest, as long as the process is very transparent, and as the process is run in a fair and objective manner, and equal opportunity given it to every career, that should sort of decide. I mean, rather than saying whether they should get back or not. And I think I think the focus should be more on a fair and transparent and objective process.
Coming to Make My Trip, your company,
Right.
there's been a surprise turnaround in terms of profitability, isn't it? Can you please explain to our viewers how that happened?
Yeah, sure. No, I think it's a welcome change from our point of view. And if I may say so, while it might come to the outsider more as a surprise, this journey had started a while back. We've been sort of working on getting to the break-even level for a while, and I'm talking about pre-COVID days. What it did during this crisis, and then this typically happens, I guess, in every down cycle, where the focus, and this down cycle was definitely sort of impacted by a lot of uncertainty, a lot of unpredictability, and the intensity of the crisis was also pretty strong. And therefore, what if there was any silver lining out of this was, and there were obviously not many, was that the focus on attacking the cost side, your model restructuring to see where were the opportunities. When you're on a steady state, you're growing. Maybe sometimes, relatively speaking, the focus goes a little less, because you sort of focus on growth. And I think it forced us to just get back to basics and see where were the opportunities on the cost side. And we sort of attacked on all fronts. And we ended up just accelerating. Like I said, the journey had started early. This only helped us accelerating that journey, and it helped us turn the corner. And that's exactly what happened. So it's not necessarily an overnight effort, to be honest. It is more a continuous journey for a few quarters that we've been able to get to this goal.
Along with that profitability has come a fundraise, right? $200 million.
Yeah.
So the two put together, what do they mean for the company?
Yeah, sure. No, that's a good observation. So let me just take a step back and give you a little bit perspective on this. So, as we walked into the crisis, we quickly went back to drawing board and started thinking what should be our strategy, and it started sort of unfolding in our minds that it has to have three phases. which will start with survival because it was sort of at that point in time, the intensity was so huge that it was almost like an existential crisis. And therefore, all hands on deck had to be more on just, how do we, sort of deal with this first phase, which was the survival. And then the second phase was going to be more as the market would open up, how are we going to revive that, and what is our strategy going to be for that revival phase. And then last but not the least was also going to be the phase which was very clear in our mind, was that as you emerge out of this crisis, let's say it might take a year, it might take 2 years, looks like it'll take 2 years because 1 year has gone before the entire all segments of travel open, maybe 3, 4 quarters more. Then how are we going to further thrive, right? So that was going to be a thrive strategy. So now linking it back to your question, so the survival we've hopefully the worst is behind us, and we've been reviving nicely for our business. I think that our making sure that our balance sheet is even more stronger from resources standpoint is linked to the third phase of our strategy, which when we emerge out of it, when we are stronger, when the focus goes back on expansion and the growth, we would need resources, and therefore it makes sense for us to be able to make our balance sheet stronger. Operationally, given that we would reach the break-even point, we will continue that trajectory, we will continue that journey. But it and we already had 200 million, so I'm not sure that we would need this capital for core operations per se. But and this has also been the learning in the past for us, that it is good to actually seize the opportunity when the market is good, when the market had started to revive, our stock price had revived, use that opportunity to raise the capital, and we got brilliant terms as well, have more resources, and figure out deployment over the years. Because you are in the business for the long term, and you would have expansion needs, you will have opportunities that you would want to invest behind. And there are few new initiatives that we have already started for the last 2 years. Corporate is one of them, and during lockdown that we actually launched in GCC. I'm not sure that you probably picked that one up or not. And similarly, a couple of other initiatives, the small fintech platform called Trip Money.
Yes.
And and these are some of the initiatives, when you launch, and these are new initiatives. We sometime back had activities and experiences focused. We are going to focus on alternative accommodation category. So there are a bunch of new initiatives that would need investment while the core operations continue to be break even and
So
profitable.
I was coming to that pandemic has resulted in a lot of innovation across industries actually. And
Yeah.
like you mentioned that, at MMT also, you tried new initiatives. So do you agree that pandemic has resulted in innovation?
Yes, indeed. Actually, wholeheartedly. And from our point of view, that was very much the core part of our strategy for phase two revival and phase three thriving. And that and there we sort of attacked on two fronts. One, on key projects on the technology that was very relevant from the core business standpoint. And a lot of those projects that we ended up attacking, because a lot of our workforce at that point in time, business was not really happening, was hardly happening, and we had to have them busy as well. And we said, okay, here are the projects that we probably were not able to pay attention before, and we attacked them and we achieved them. And a lot of them were automation related projects as well. And then the second very important aspect of that was that we looked at new areas. We looked at sort of even diversification areas. The fintech Trip Money that I mentioned is not necessarily only focusing on travel related stuff. I mean, we added insurance product. We are going to add more consumer loans product, even for non-travel categories, etc. as well. And similarly, we launched on and a lot of people actually thought that this was not really a right time to go out and launch your a platform in the new market, and we ended up doing that. Our thought process was slightly different because we were thinking long-term strategic, and our product was ready, and we went to the GCC market, and we thought actually, because there are a lot of players who are getting impacted, this might be an opportunity to actually go in if the space is getting created probably perfect time for us to do the soft launch. And then, as we come out of the travel, come out of the crisis, we will grow that. And similarly, we also built up a third party advertisement platform as well. So there were, I think it'll be fair to say, in a normal steady year, you would probably end up doing, there would be a lot of business as usual, and the percentage contribution coming in from cutting edge related projects would be much less. And we ended up just reversing that percentage completely in this during pandemic, because
Talking of players, do you see consolidation in the industry happening?
well, I think it's a good observation again. Time would only tell. I do think on the supply side, and we already seeing, like, let's say for the hotel and the hospitality side, you can see that there are already some moves in the marketplace, which is going to consolidate some of the hotels, who could be the opportunities that might be available for some of the chains which are healthy, have resources, etc. And similarly, even in the intermediary space, which is where we are, there could be potential consolidation, but the market is also pretty big. And if the consolidation also happens, it might actually end up being more organic, people sharing, taking share away from others, than in inorganic. So having said that, we should also keep in mind that there is also overall internet e-commerce. There is one more at a macro level sort of silver lining out of this COVID has also been um, the consumer behavior shifting from offline to online even more. Because that people didn't really have the option to get out, and then they were forced to go to online. Pretty much every category, and travel is not going to be very different. It'll sort of pick up. So that actually increases the opportunity size or the pie size, and therefore there could be more interest. But you're right, some sort of consolidation in some shape or form is imminent.
So you spoke of the pie size. What is the pie size now, and at what rate are we growing?
See, we've been growing. It depends on which segment that you sort of look at it. Overall, travel has been growing double digit, but online travel has been growing about 25 odd percent year. If you look at outbound travel, it was actually growing at about 11-12% as well, which was like the international, travel segment. Now there has been setback on international segment for definitely 2 years, and before it starts to grow again, but the opportunity still exists. I think it is, when it comes back, when everything is sort of, or the entire world is out of the woods on COVID side, I think it'll come back, and the same amount of growth and the headroom opportunity would still be there. And as far as hotels market is concerned, again, it has been growing at a high single digit growth rate as well. I think that the segment, it'll be fair to say also that there may be a segment that might get hit in the short term, not necessarily from the long term. I don't particularly believe that. And that's going to be business travel led by large corporates, perhaps, and more international. And that the overall business travel pie might shrink in the short term, but from our point of view, given that our share of that segment is very small, yeah, there will be opportunity to grow our market share on even on that segment, but that will take some more time. So I think there's going to be a setback. There's already there for last 1 year, and I think probably about another year. This 2021 overall business travel, given the international travel wouldn't have opened up as much, the overall pie is going to shrink a little bit.
How has the share changed for Make My Trip in terms of hotels and flights during the COVID period? Like from pre-COVID to now, what is the change?
Yeah, that's an interesting question as well. So for flights, we've been gaining share. Actually, even for hotels, for the segments, we've been gaining share. The flights numbers are out there and in public, and for the hotels and the rest of the lines of businesses are very estimates, because the third party reports are not available. But given the flight data is available, DGC has sort of releases the data, and we know our segment data as well, and we've been sharing that publicly as part of our quarterly results as well. That has improved from 26 odd percent of the total market to 29.6%. So very close to about 30%. So we've gained about 3-4 percentage point of the total market. This is not of the online market. This is of the total market. So there are, if there are 100 travelers, every day that is flying, about 30 of them are actually booking on us. Make My Trip and Go Ibibo put together.
And what about hotels?
So hotels, of the total market, pre-COVID, our share was, like I said, and it's more like estimates rather than a firm number, and it's also a moving number. So we used to be high single digit, sort of about 9%, and now we should be high or mid to high double digit. So anywhere between 15 to 20% sort of market share of the total market again, not the online market.
So, looking at the future, what would be your takeaways on pricing, one, and discounts?
Again, a good question. So, maybe I think it's a function of the market dynamics pretty much. I mean, it's also a function of demand, that how are going to what is going to be the price movement. As we've seen in the last two quarters, really, the first 2 quarters there was hardly any business happening. um, as the business is recovering, given that every partner of ours is focusing on filling up either the flights or the bus seats or the hotel rooms, there has been drop in the prices. There has been tremendous amount of price cuts, promotions, the offers that are out there, which is going to obviously get at some stage normalized as the occupancy grows or the load factors grow as well. So in the short term, you would see attractive deals, attractive offers, prices coming into the market, given the focus is to improve the occupancy level or the load factors or the seat factors. But as you fully recover and touch the pre-COVID level and get back to sort of normal next year, you would see prices forming up a little bit as well. Because and then at that point in time, the focus might just be more on the yield management, given the demand would have picked up. So I think it's just going to be a function of the demand in the market, and then within that specific segments, and that would determine what the attractive offers or the deals or the price cuts or the discounts that you would see.
What are your expectations from the government? Travel and hospitality industry have been hit really bad, and but have you got what you wanted from the government?
No, the expectation has been, obviously, industry has been out there trying to shout out huge amount of sort of wish list of expectation, if you will, on all the corners. And while I think there was some respite that was sort of offered more on the liquidity side, some moratorium and all of that, but I think it'll be fair to say that even the budget sort of announcements that happened, or even during pandemic, whatever were the reliefs that were being offered, various segments of the society, various sectors of the industries. Travel and tourism, unfortunately, has been pretty down the order on the priority list, and the industry has been quite underwhelmed with the sort of support that relative to the expectations that we all had, and also the fact that the sector was very badly hit. So, so that's the sort of the situation for the last few quarters and even current, right? And now going forward, I think the expectation, and maybe there are constraints at macro level, at the country level that we have, and so we are sort of well aware of that as well. But we will keep trying, and we will keep going back to the government and represent our cases to say where it makes more sense for us to be able to, given that this sector actually generates huge amount of employment and has been the worst hit. So, we'll keep trying and doing that. And one of the areas I think where this side as well is, if the recovery is going to be led by domestic travel within India, then there has to be a lot of investment that should go on infrastructure improvement, on improving the experience of various destinations. So, we've been doing some stuff on that front, but there is still a huge amount of room and an opportunity, because this year or two will be an opportunity where um, if we focus and we improve and we invest in the right areas, we improve the overall experience, customer experience on the destinations, we can take the market away from the international travel. It's a great opportunity, but what, that we will have to really move fast and make investments in the right areas. So that is the expectation, besides the usual ones, which are already there. Some respite on the like, for example, an age old demand has been on the ATF side, to bring it under the GST for the flights, for the airlines, and many other sort of industry demands that are there for even hospitality and the others. But that I'm not sure now when will that happen, because that opportunity typically is around the budget, and that's already gone. But we'll keep trying.
Mr. Magow, what is the 1 year assessment of the hit really to this industry? Travel and hospitality industry, is there a figure now which we can say this is the blow?
Well, you can pick up surrogate with. I mean, it's obviously has been the worst possible a hit that the industry faced. But if you look at it, I mean, some of the third party research institutes, CAPA, has been talking about the potential hit on the airlines front. But my sense is overall, if you really see for this fiscal, which is your 2021, I think the hit overall, in terms of what it used to generate revenue or gross bookings, etc., whichever metric that you want to pick it up, it's going to be about 65-70%, if not more. So, on an overall basis, because, all that recovery numbers that I shared with you earlier, and they've been all run rate numbers, right? So, this is last month and, last quarter sort of numbers. But if you look at holistically the whole year, the damage has been much more this year, and therefore, a lot of sort of pressure on the resources of all the operators in the industry, like
So
literally.
what you're saying is 65 to 70% of the total pie has been eroded.
Yep.
Thank you, Mr. Magow, for talking to Business Standard,
Right.
and all the best.
My pleasure. Thank you so much.
Thank you.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.